I don't want to use the term cautiously constructive or cautiously optimistic because I feel like those are a bit overused. But yes, we are optimistic about equities in the back half of the year. But I would say, Scott, that this is not equities, in the most broad of terms. I would say that there is going to continue to be market volatility as we move forward over the next couple of months. There are going to be pockets of winners and losers. Again, the things that we've been talking about under the surface. Fundamentals are increasingly important, I believe, as we move into an environment where inflation's not likely to slow perhaps as quickly as we wanted it to. We're not getting as much easing of those supply chain dislocations as we were anticipating coming into this second quarter. But the reality is that, the first quarter was marked by what I frankly thought were very conservative outlooks from many of the companies that reported. It was not a strong season for several of the sectors and subsectors that many of us are invested in. And therefore, looking ahead to this second quarter, I feel like the stage has been set that companies have digested in terms of their outlook the expectation that the Fed is going to be very aggressive. Perhaps they are still digesting the potential implications of the war in Ukraine and that being a war of attrition. But I think that we're in a better position this quarter to take a look at those expectations for earnings growth. Yes, they're coming down. Yes, GDP is slowing. However, that doesn't necessarily mean that there are not opportunities. And when compared with what else you could be doing with your money, bonds aside, even if you're sitting in cash and waiting for the next best opportunity, there are things in the market that will provide you a better return than cash in this environment, although it is not as easy to find those pockets as it perhaps was over the last couple of years.
All right, Pete. So you know who is not constructive on stocks? And don't say Steve Weiss. I know you want to jump. I mean, you're thinking of Weiss. You channel Weiss automatically when I say that, but it's not Weiss. Dan Niles on Squawk Box today. I want you to listen to what he said, and we can react on the other side.
You should be completely out of the pool. As we've said multiple times, if you're a retail investor and you can't trade the market every single day, sit on cash. That's the best thing. Wait this out because the Fed's going to be raising rates this entire year. If you can be nimble, then you can buy stocks that'll hopefully outperform and put shorts against that and hopefully be able to make money.
All right, Pete, what do you make of that? Big reality check from Dan Niles. Do you agree? Says you should be completely out of the pool.
Well, I would say I would agree with one side of what Dan was talking about, which is that you need to be nimble. But I wouldn't say it's in stocks, Scott. I would say that's why you and I had this discussion the other day about how many option positions that I had on.
Like
and it was
68.
An extraordinary number.
Something like 68.
Yes. Yeah, and I've trimmed back some, but not a whole lot today. And as a matter of fact, I've probably added a couple along the way as well. So because of that, maybe it's kind of neutralized out, still somewhere close to 68. But as far as what Dan Niles is talking about there, I think you can trade the options. The options are giving you great opportunities day in and day out. You and I both know it. We talked about those big cap techs when they were buying them a couple weeks ago, when it was Apple, it was Microsoft, it was Facebook, it was just about every one of those big name tech names outside of Amazon that you could see. And we were seeing all that option activity. You've got to be very disciplined, though. But we talked about you've got to be nimble. And if you can be nimble, that's the way to do it. And that's one of the reasons why when I spoke to Patty earlier today, I was saying, look, I see so much more opportunity right now trading with options than I am finding opportunities within stocks that it makes far more sense to do that. I also seem to be sitting on a fair amount of cash right now because of the fact that I'm doing far more trading in options than I am in stock. So at the time, if I see the right opportunity, Scott, I'll jump on it. I'm looking at stocks all the time trying to make that decision. Apple was one of those, but the options absolutely exploded relative to what the stock did.
Bear with me one second, Pete.